Welcome to Trading Nation. I'm Mike Santoli. Earnings season kicking into high gear this week with more than 50 S&P 500 companies, including 7 Dow stocks reporting. Big banks like Morgan Stanley and Goldman Sachs with results on Tuesday. Netflix also due out on Tuesday. Other notable names include PayPal on Thursday and Honeywell out at the end of the week. So what are some names that look best into their earnings reports or maybe not so good? Boris Schlossberg is with BK Asset Management. Wald is with Oppenheimer to let us know. Hey, Boris, what names or name would you focus on, and what would be your play right here?
So Netflix is the ultimate go-go stock, and I think the market is going to be glued to its results, not the least of which because the results here are going to have a big impact on the indices as a whole. Now, Netflix, of course, can't be measured by any kind of conventional valuations, and as always, the focus is going to be really on subscriber growth. Now, the thing is here that I think domestically, subscriber growth may actually miss expectations because there's a lot of competition from other OTT broadcasters. But globally, that's where the hopes are really pegged by the market. If Netflix can produce 5 million international subscribers, and they've made a big, big bet into India, and if it can conquer India, it will be almost an Amazonian-like achievement in a sense that they'll really become unreachable, I think, as far as a global broadcaster to command OTT going forward. So I think if you see those kind of numbers, you have a very, very strong chance here for the stock to really pop hard towards the 360, 370 level. Now, having said this, though, if they disappoint, it could really collapse. So I think it's a great long, but you need to buy the puts here, even though the volatility is tremendous. It's worth the insurance to just protect the downside. But overall, I still think that if they can execute well, it's going to be a very big pop, and the shorts are going to go running for the cover.
All right, so maybe own the stock and the downside protection. Of course, that stock does swing wildly on earnings typically. Ari, I know you've been sifting among a lot of the names about to report. What's your take on what to expect here?
Yeah, it's become a much more split tape here underneath the surface. So as we've had this pretty meaningful sell-off in the market over the last 2 weeks, 2 questions we have to be asking ourselves. One, where's the opportunity? 2, where is there still additional downside risk? And I think to generally answer those questions, I think the opportunity are on stocks coming off of new cycle highs. For those, this weakness is viewed as a correction in a bull market still, in an uptrend. On the flip side, I think you want to be worried about stocks that are coming off of lower highs, stocks that failed to get back above where they were in January. They've broken down by a greater degree. So we're offering up 2 sector-neutral long-short pairs, starting first within the industrial sector. What you want to be long, CSX Corp. Coming off a new high, correcting into support, still above a rising 200-day. Strong rail industry, too. Really best of that sector. On the flip side, stay away from United Rentals, making lower highs throughout the year. We can see a much bigger breakdown below support levels, below its 200-day. Final one within the financial sector. What you want to own, American Express. Here's a stock also rated outperform by our fundamental analysts at the firm, coming off a new high, coming into a lot more support. What you want to stay away from, a name like Bank of New York Mellon, making lower highs throughout the year, breaking down by a larger degree. So great examples of how split some of these trends are in the market right now.
Yeah, absolutely. Yeah. So if you're looking to buy, then something that's in an uptrend but has pulled back hard might be the place to look. Ari, Boris, thank you for joining us today. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.